Supermicro computer continues to exhibit elevated volatility, and this remains a defining characteristic of the stock's current technical and fundamental profile. Recent price behavior places the shares near the upper boundary of a wide and declining short-term trend channel. Historically, this positioning has often created attractive selling opportunities for short-term participants, as price action tends to revert toward the lower end of the prevailing range. As such, a reactionary move lower remains a realistic near-term scenario. That said, a decisive breakout above the upper trend line at 34.25 would represent a material technical development. Such a move would initially indicate a slowing of the current rate of decline and could serve as the first early signal of a broader trend reversal. This level therefore remains a key technical threshold and will continue to be closely monitored in the sessions ahead. From a trend-based projection standpoint, the current 3-month outlook suggests a possible net change of approximately 8.5%. Within that framework, modeled outcomes range from a downside scenario of 36.07% to a potential upside of 7.31%. Looking further out, the 12-month projection also reflects an estimated 8.5% change. Based on these calculations, expected performance over the next year could fluctuate between 31.62% and plus 56.97%, placing the implied future price range between approximately $23.99 and $52.99. These estimates are probabilistic in nature and remain subject to change as new data becomes available. Focusing on recent market activity, Supermicro closed Wednesday's session on February 4, 2026, at 33.76. This represented a significant single-day gain of 13.78%, with the stock rising from the prior close of $29.67. Intraday volatility was notably elevated, with a total trading range of 10.222%, as the stock moved between a session low of 31.70 and a high of 34.94. Over the last 2 weeks, the shares have advanced by 4.71%, reinforcing the view that near-term momentum has turned constructive despite the broader declining trend. Volume dynamics further support this assessment. Trading volume expanded materially alongside the price increase, which is generally viewed as a positive technical confirmation. Approximately 115 million shares changed hands during the session, equating to roughly $3.88 billion in traded value. This represented an increase of approximately 78 million shares compared with the previous trading day, indicating heightened market participation and renewed interest in the stock. From a longer-term perspective, Supermicro's 52-week price range spans from a low of 27.60 to a high of 64.04. At current levels, the stock is trading 49.19%, or 32.68, below its 52-week high. Relative to its all-time high of 122.90, recorded on March 8, 2024, the shares remain down 72.53%, or 89.14. These figures underscore the magnitude of the prior drawdown and provide important context for the recent rebound. On the fundamental front, the stock's latest rally followed a notably strong fiscal second quarter performance. Revenue increased approximately 123% year-over-year, while non-GAAP earnings per share exceeded market expectations. In response to this performance, management raised full-year revenue guidance materially, increasing the outlook to approximately $40 billion from a prior estimate of $33 billion. This revision reflects continued strength in demand across the company's core product lines. Management also highlighted that more than 90% of total sales are now generated from artificial intelligence GPU platforms. This shift underscores Supermicro's strategic repositioning toward becoming a comprehensive AI infrastructure provider. Looking ahead, the company expects newly introduced AI-optimized systems and DCBS solutions to contribute to higher margin sales extending into 2026. Despite this growth trajectory, several structural challenges remain. Non-GAAP gross margin declined to approximately 6.4%, indicating ongoing margin pressure even amid strong top-line expansion. Additionally, customer concentration continues to be elevated, with a single hyperscaler accounting for an estimated 60% to 65% of total revenue. In the near term, robust AI demand and a more risk-on environment for AI-related equities have supported the recent rebound in the stock. However, this dynamic is likely to contribute to continued volatility as investors reassess the balance between revenue growth, margin sustainability, and concentration risk. Over the longer term, the company's ability to sustain performance will depend on margin recovery, customer diversification, and consistent execution across higher-margin DCBS and full-stack offerings. Failure to make progress in these areas could leave the stock vulnerable despite strong revenue momentum. Analyst sentiment toward supermicro computer remains broadly neutral. On Wednesday, November 5, 2025, NEM assigned the stock a buy rating with a hold action. On the same date, Bank of America Securities issued an underperform rating with a hold action, while KGI Securities assigned an outperform rating with an upgrade action. Earlier on Thursday, October 23, 2025, Goldman Sachs issued a sell rating with a hold action, and Raymond James assigned an outperform rating with a hold action. Taken together, these assessments result in a generally neutral consensus. Valuation metrics, including price-to-earnings and price-to-book ratios, are also considered neutral, as are analyst expectations for return on investment. From a technical standpoint, the current chart configuration shows predominantly positive signals. Both short-term and long-term moving averages are issuing buy signals, with the short-term average positioned above the long-term average. This alignment typically reflects improving momentum. Should the stock experience a pullback, support is identified at 30.68 and 30.5. A decisive break below either level would generate sell signals. A pivot bottom was established on Wednesday, January 14, 2026, and since that point, the stock has advanced by nearly 20%. This move supports the expectation of further upside until a new pivot top is formed. In addition, the 3-month MACD indicator is currently generating a buy signal. Rising trading volume alongside rising prices